everyone. Welcome to Open Line. Glad you are with us tonight. We are talking about what a lot of people are talking about here in Nashville. We're talking about the budget, the Metro budget, property taxes. Of course, the mayor just delivered the State of Metro address, and there was a lot of good news in there. He's talking about spending money on a lot of great things, including schools and teacher pay and police and firefighters. Question is, how are we going to pay for all of that? How did we get to this point? So we're going to be talking about that tonight, and this is a good chance for you to call in with any questions you may have. Always happy to have with us Councilman at Large Bob Mendes, and he is joining us via Zoom. Councilman, thank you so much for being here.
Happy to be here, Ben. Good to see you again.
Yes, so I read your blog that you put out right after the mayor's State of Metro address, and you described it as an Oprah-like speech. And I think I know what you're referring to there, but what do you mean when you call it an Oprah-like speech?
Well, I mean, there's the famous Oprah segment where she points to people in the crowd and say, "You get a car, and you get a car, and you get a car," and she's very generous with her audience. You know, I've been to 6 State of Metro addresses so far, and 2 of them have been this what I call Oprah style, where there's just a lot of announcements about new spending. The last one I heard was with Mayor Barry, and the budget really couldn't tolerate it. This time I think we're in a better position to do some of the things that we need to do as a city. So I don't mean it as a bad thing, but there were a lot of announcements about new initiatives in the speech.
20 new firefighters, 20 EMTs, 40 new police officers. Let me look at some of the other stuff in here. 30 million in new investments in affordable housing, 81 million more dollars to Metro schools. Teachers, Nashville teachers will be the highest paid in the state. So there is a lot of good news. How did we get to the point we're able to do this? 1 year ago, we were in dire financial shape, and how can we do this now?
Well, I guess this is the 4th budget season that you and I have been talking about this, and for the first couple, I was warning that we were going to have a hard time. Last year we did have a hard time, and we bit a hard bullet and got the city from in rough shape to being stable. There's more work to do to make this be sustainable in the long run, but when we get the government budget fixed, we can finally do some things that we need to do, like expanding the police into Antioch with a new precinct there and getting more firefighters for the first time in a very long time. So that's really how it was, just the hard work and buckling down with the budget last year.
If somebody said, well, this would indicate that 34% property tax increase was too high, what would you say to that person?
Well, that is, I'd ask them to go speak to people in Antioch who currently have long wait times for police because they need police officers to come from Hermitage or 12 South. A new precinct out there doesn't seem like a splurge to people who live there. We've got some of the lowest staffing of firefighters in the state, below where we should be. Fewer firefighters now than we had in the mid-90s. It's not a splurge to invest in firefighters. And getting our school teachers finally to be well paid, that's just fair to do for what they do for the city and our children.
Does any of this, we're also getting money, federal money, because of COVID. And I think there's $267 million. Is that right? That's coming in from the federal government. You would know better than I. What is that number, and how much of an impact does that have on our budget situation, with the knowledge that's one-time money, I believe? So how does that work?
Right. And so it's $267 million over 2 years. And we haven't received any of it yet from the federal government, and we don't really know yet when we will. This is a law that passed just in the last 6 weeks, and I think, frankly, the federal government is still making the rules. The state comptroller has been clear with cities to not absolutely not use any of this money for your operating budget or recurring expenses. The state comptroller is clear in its guidance to cities that cities are supposed to use this for infrastructure and one-time costs that don't have recurring operating expense.
And you feel like that's what we're doing? I guess we don't know what we're going to do with it, but it's not responsible for what we're seeing in this from the mayor's speech.
There is none of that $267 million in the budget that was announced last week. I'm hopeful that, like last year's federal money, that we come up with a transparent public process to decide as a community how to spend the money. I expect that when we pass the budget in June, it will have a public, transparent process that'll be on videotape, and anybody can come to the meetings. I'm expecting we'll create a process that will be public for deciding how to invest the money.
We are in a reappraisal year, and normally, I guess, in past reappraisal years, not every reappraisal year, but in past reappraisal years, when that happens and the property tax rate is lowered by law, it's then raised. This is a chance to raise the property tax rate in a reappraisal year. That's not going to happen this year. Is that right? And how do you feel about that?
I think it's right. I'd be really surprised if the rate ends up being any different than what the mayor proposed last week, which is $3.28 per $100 of assessed value. I'd be surprised if it's anything different that we pass. And how I feel about it is I got two feelings. One is, if this were just a math problem, we probably still need to correct more of the long-term problems with the budget, and it probably should have a rate that's a little bit higher. Because we absorbed so much last year, it doesn't seem like the right time to do it. You know, one of the things you heard me say on your show a year ago is it took 6 or 7 years to get into this problem. It's going to take us 3 or 4 or 5 to get out of it. And so I think there's more work to do on shoring up the finances so they're sustainable in the long run. But I don't think there's any appetite to try to accelerate that into year 2 of the recovery. So I think the rate the mayor proposed will pass.
And so that means, yeah, no property tax increase this year. There is this reappraisal, right, and we can talk more about that, but no property tax increase this year. That's the bottom line.
That is what's proposed. I think that's what passed. That is the bottom line.
What else was I going to ask here? I guess, will there be a substitute budget? That I'm seeing that. There normally is, right?
Yeah.
What about that whole process?
Yeah, you know, frankly, I mean, I'll admit I sort of busted the process in the last couple of years of the Briley administration because that budget that he was proposing was so far out of whack. And historically, most of the 58 years of Metro, there's been two budgets with any credibility: the mayor's budget and the substitute proposed by the Budget and Finance Committee chair. 3 years ago, I busted that process by injecting a third credible budget, and frankly, it's been a little chaotic since then. I think the finance department, the mayor's office, is pretty intent on getting back to the long-term practice of two budgets: the mayor's budget and a substitute proposed by the Budget and Finance Committee chair, who this year is Councilmember Quante Toombs. So I think there's just going to be one substitute that is credible. Maybe there will be others proposed, but they won't. My guess is the math won't add up if anybody else proposes one.
As we have talked over the last few years, one of the big issues for Metro has been debt, has been the amount of money it's paying on interest on its debt service. Where does our debt stand now, and what will we be paying in this next budget? So
they're big numbers, so when you say them, they're shocking. But the reality, so the better way to look at it is as a percent of our overall budget. And when I got in office 5 years ago, we were paying around 11% of our budget to pay debt service. Last year it got up over 14%. This year it'll be 13 point something percent. So the raw numbers are last year, the one we're in right now, we paid $354 million to service our debt. It's going to go up by $6 million up to $360 million. Again, that's going to be about 13% of the overall budget. So the amount it's going up this year, $6 million, is absolutely positively the lowest increase that since I've been in office. And that's really a result of the finance department refinancing a lot of the debt. And I want to quickly add, last time we did refinancings a decade ago, we pushed out the deadlines and really just made things more difficult. We kicked the can down the road. These refinancings have all been only for a lower interest rate and not extended any due dates whatsoever. And it's been an enormous savings, maybe I think in the vicinity of $40 million a year worth of savings to refinance over $1 billion worth of debt to lower interest rates.
That is interesting. And so, yeah, that was a big concern. Last year, 14% of our budget's going to pay debt. You're saying this year it's down a little bit, around 13%. Do you think we're going to see that number go down? Will it go down to 12 and 10, or are we going to stay at 13? Or where do you think we're headed here?
Well, this is a function of whether the city stays ahead or behind the curve on its revenue. We're still, after last year, as we've talked about before, the lowest property tax rate of all the major cities in Tennessee, lower overall tax burden for all our peer cities regionally. As long as we keep the tax rate anywhere in the vicinity of reasonable compared to the budget, then the debt service will be able to handle it. And I do expect it to nudge a little bit down. The safe range, government accounting geeks consider a safe range of basically 10 to 15%. So if we get down into the 12s or stay in the 13 range, that's doable, sustainable in the long run.
There was a lot made about the comptroller coming in and kind of saying, get your act together, Nashville. I mean, again, when you're spending this kind of money on things, it seems like our act may be together. Is the comptroller backing off? Does the comptroller have to approve this? Where does that stand?
So the comptroller has to approve the budget every year, and our current finance director, Kevin Crumbo, I believe, has stayed in close contact with the comptroller's office through the last year and COVID and doing revenue projections and with all the bond refinancing. So they won't approve it or not approve it till after it's passed in the council, but I have every expectation that the comptroller will easily approve our budget this year. So they're still paying attention like they do to all the cities in the state, but I don't think we're on as much of a watch list as we used to be.
Another issue that came up was the rainy day fund. We certainly didn't fund a rainy day fund to what many would consider adequately. What are we doing? Are we putting money in the rainy day fund with this budget, or are we still not doing that?
So the technical term for that is a fund balance. And heading into COVID, of the 25 biggest cities in America, Metro had the absolute worst, dead last out of 25 of our fund balance. It was just literally just under 5% of our overall budget, when the average for the 25 biggest cities was around 30% of their budget. So we're way behind where we should be. This last year, a significant chunk of the property tax revenue, new property tax revenue, has gone to shore up that fund balance. And we will have gone from literally at the end of last fiscal year, a couple of days worth of expenses on fund balance. Think about that in your own life. If your checking account has a couple of days worth of expenses, not a good thing. And we're going to head into this next fiscal year just shy of 2 months worth of expenses in fund balance, which is a little bit short of what professionals, the Government Finance Officers Association recommends 2 months, and we'll be a little shy of that, but it's a heck of a lot better than we were a year ago. And the mayor's budget, I'm very happy to say, does not spend or cut into any of that fund balance. He proposes maintaining it at where we're at as we finish up this current year.
We'll start taking calls here in a moment, but another big issue has been Oracle. Oracle coming here. It's 8,500 jobs. It's certainly an impressive company. There's some question about the incentive package and that kind of thing. What are your thoughts about Oracle coming here? And if somebody is concerned about any incentives that are going to it, walk us through that.
Sure. So I think the first topic we ever talked about a number of years ago was tax increment financing, the way the city's done it for 25, 30 years. This Oracle deal is very different than any of the tax increment financing you and I have ever talked about. The biggest thing that's different is, unlike every tax increment financing deal Metro's ever done, here we will not borrow any money from a bank, we won't issue bonds, we won't pay interest, we won't pay fees. We're able to do that because Oracle is a big enough company where they've got enough money to pay for infrastructure up front. And so it's a very different deal than we've done before, one that I think we heard yesterday will save the city some $50 million in interest compared to if we built the stuff ourselves through a bond issuance. And we can talk about more about the details, but that idea that not only do we not pay interest, but if we bonded the money ourselves to build the infrastructure, it would cost tens of millions of dollars of interest that we're saving with the deal. It's a win-win, I think, compared to how most deals have been in the past.
So you support that. Now, there's some, that are concerned about our growth, our rapid growth. And some have said Nashville's culture is being stifled by rapid growth, and their fears residents will be further displaced. That's out there. What do you think when you hear those kinds of concerns brought up in relation to Oracle?
Well, I mean, that's real. I mean, that's definitely real. The thing I would note is we're not growing because Amazon came to town or because Oracle came to town. We're growing because we're an inland city that's high enough to not get washed away with climate change on the coast, and we're an attractive place to live for a whole bunch of reasons that we all love Nashville. And short of building a wall at the county line, we're going to grow a lot, is what experts say. And so, and another thing that I think people should keep in mind is where Oracle is going is actually zoned for higher density than Oracle is going to bring to it. They're going to bring fewer people per square mile than that property is currently zoned for. So if Oracle doesn't show up, all the infrastructure is going to be built anyway because we're a growing city, and it's likely to be higher density. So like the issue is real about how rapidly we're changing, but we can either do it with Oracle or without Oracle, but we're growing either way. And so the issues are important for us to talk about, but it's not because of Oracle or because of Amazon, I think.
All right, very good. That kind of sets the table for our discussion. Opening up the phone lines now. Steve's on the line. Steve, hold on. We're going to take a break. We'll take you first, though. And if you want to call in, there is the number 615-737-PLUS, 615-737-7587. We'll take your questions. We'll be back right after this.